Hey everyone! Last week I talked about a potential K-shaped economic recovery, and although I think a V-shaped recovery is pretty much off the table at this point, the US still has a potential for an aggressive expansion at some point. The US is currently in the midst of the greatest cycle of uncertainty on record. This is, of course, being driven by the coronavirus pandemic and all of the economic headwinds it spawned. But the uncertainty is being exacerbated by the particularly fractious upcoming election and the extended delays in delivering another round of much needed federal stimulus. There's a measurement called the Economic Policy Uncertainty Index that has proven to be a very good tool for modeling both behavior and economic metrics. When uncertainty is elevated, interest rates tend to go down and people tend to save more. When uncertainty is low, people and businesses tend to spend more. The uncertainty index has been in record high territory since March, when the health crisis impacted the US. This is aligned with interest rates falling to record low levels, but it is also aligned with record savings. US bank reserves are at an all-time high of $2.8 trillion, an increase of more than $1 trillion since February. Corporate cash on hand is also at an all-time high, $1.75 trillion, and the personal savings rate peaked at a record 33.7% in April. And even though it's come down, it is still an exceptionally high level at 18%. Normally, the savings rate is in the 7 to 8% range. And as a result, bank deposits are also at a record high $15.8 trillion. Presumably, when the forces creating the uncertainty abate, a lot of the capital on the sidelines, the dry powder, will come back into the market as spending and investments. That implies that once a substantive stimulus package is passed and the election is resolved, some of the uncertainty pressure will abate. The final and most important piece will be a medical solution to COVID-19. Now, hopefully the stories are true, and we will have a medical solution coming into play within the next few months or a half year. So effectively, we may be on the cusp of a significant reduction of uncertainty, and if that comes to pass, it could unlock the trillions of dollars on the sidelines. As that money flows back into the economy, it could deliver a significant economic boost, basically a multi-trillion-dollar economic stimulus. For real estate, that influx of capital comes into play in two ways: consumption and investment. Consumption will benefit retail, industrial, and hopefully hotel properties. It should also give a boost to self-storage and apartments. At the same time as uncertainty abates, it could unlock a wave of investment capital, some of which would flow into the real estate sector. Meanwhile, falling uncertainty could result in upward pressure on interest rates. Not a lot and not fast, but still a factor for real estate investors. If you think about it, this implies that investors who take action today have the opportunity to get ahead of the wave while maximizing the yield spread over the cost of capital. Take a moment to think about that. In wrap up, I want to highlight one more great opportunity. On October 15th, Marcus & Millichap will hold a live webcast that will be an industry first. Marcus & Millichap's CEO Hussam Naji will host a very unique panel of guests, the leaders of 4 of the nation's top commercial real estate trade organizations: Doug Bibby with NMHC, Tom Bisaquino with NAIOP, Windy Man with Crew, and Tom McGee with ICSC. I hope you can join this live industry-leading event as 5 of the nation's top industry leaders share their insights on the most important trends and policies affecting commercial real estate. This group of thought leaders truly have their eyes on the horizon.